Hey, welcome back to the Junius Maltby channel, everybody. You're looking at a pile of coins and money from all over the world, because that's where today's headlines are going to take us, plus what's in the secret envelope. We'll save that for the end of the video, so stand by for the secret envelope. Alright, yeah, we got money all over the world here. We got headlines from all over the world. We don't have time to read all the headlines, but we're going to read through a lot of them, and we're not going to read all the articles, because that would be impossible. You can read them yourselves, but it's pretty interesting what 2014 is already setting up and looking like. They don't pull any punches. You know, the stuff, the entire situation, the economy, the world markets, it unravels and happens so quickly. And things can change in a blink of an eye, as you saw yesterday. People woke up, everything was fine. We were breaking records, right? 54 Dow Jones Industrial records in 1 year. And then within the blink of an eye, it drops 150 points yesterday. Regardless. And then they interview Icahn, or Icahn, however you pronounce his name, and he was shocked. He couldn't believe that it had dropped. Well, why would it drop? How could it drop? Surely the stocks can only go up, right? Alright, well, let's read through some headlines really quick here. George Soros says world's greatest risk is China. Poverty in Italy hits record levels. China's local debt swells to 17.9 trillion yuan in audit. What happens when U.S. and China unwind? And that article you can find if you do a search through Financial Sense. It's a good one. Bernanke has set the stage for the Fed's collapse. Jim Rogers. The world braces for the retirement crisis. Expect a 3 to 5% correction next month. That's in Art Cashin. Let's move on. 3 reasons why this could be the bottom for gold. And that's one article we're going to pay a little bit more attention to. Let's go into it. So 3 reasons why this could be the bottom for gold, what we saw, the 1200 range. The sentiment, number one, is the sentiment for gold, as bearish as it's been for the years. If you watch CNBC, you hear almost every guest talk about how bearish they are on the precious metal. They will list all the reasons why gold should go lower. Even the famous hedge fund manager, John Paulson. Well, when the crowd in the stock market well leans so strongly in one direction, I want to start looking the other way. Now, this is an article by Nicholas Santiago, and I'm actually reading what he wrote here. So, gold is real money. This is reason number 2. We've talked about this over the past, 5,000 years, or 65 to 70 centuries, depending what who you talk to. It's been viewed as money. But, however, since President Nixon took the U.S. off the gold standard in the 70s, it's been viewed as a useless relic. Why then do central banks around the world own gold? Remember, the very people that issue all these coins and papers, they own gold. So keep that in mind. Remember, gold cannot be printed like this stuff. Gold is not magnetic, and also the greatest conductor of electricity. So believe me, it is not a useless relic. It has many uses. If gold was a useless relic, why do you think President Franklin Roosevelt confiscated it from the U.S. citizens in the 30s? Central bankers around the world continue to print paper money, fiat, at an alarming rate. This is happening in the U.S., China, Japan, England, Europe, and of course, Zimbabwe. This is reason number 3 coming up, the current pattern on the charts is suggesting a potential bottom pattern is forming in gold. And we've all seen that. I mean, look at it. The resistance that it's meeting at the 1200 level. It's pretty much bouncing off it at this point. And today we're at, what, 1229 or something like that. The commercial money is only slightly bearish at this time. Last year, the commercial money was heavily bearish on gold. Remember, the commercial money is always early to the party and could be accumulating at this time. So, gold is at a 2-week high as the new money floods the market. Interesting. COMEX gold up 1.9% to $12.25.20 an ounce. Weaker U.S. stocks burnish gold's allure. It's amazing how frantic people are. One day, these people are like, the way they panic, the way they run back and forth. One day of a little bit of fear in the market, a little bit of the dip in the Dow, and weaker U.S. stocks burnish gold's allure. You wonder who these people are. It's almost like they're bipolar investors. Index balancing steers new gold money to gold and silver. Gold and silver futures surged on the first day of 2014, Thursday, as weaker U.S. stocks and rebalancing commodity index funds channeled money toward the precious metals. Gold for February delivery, the most active contract, rose $22.90 or 1.9% to settle at $12.2520 a troy ounce on the COMEX division of the New York Mercantile Exchange. This was the highest settlement since December 18th. And it goes on, which you can read. The point is, gold and silver are up. You know, they're up again today. We're up at $15.80 for gold right now. $12.3880. Silver's at $20.22, up 21 cents. You know, let's do a quick check and an index on the dollar. We'll see what the dollar's behaving like right now. So stand by. We'll do a quick look up on the dollar. Dollar's at 80.769. So what do you guys think's going on? You know, I think we're going to see a trend here. I think what we talked about going into 2014. I think gold's on its way up. I think we saw a bottom. I could be wrong. I've been wrong before, right? 2014 is looking solid. You know, you get there's all the skepticism in the market, all these people saying that it's not a good investment. Everyone's saying that gold is it's over, it popped, it's done. You know, the stocks are breaking records. It's time to get back in the stock market. Well, we should never listen to those people to begin with anyway. I mean, we always keep in mind and always remember, these are the very people, when the house was on fire, said it wasn't. The smoke detectors were going off. The rooms were filling with smoke. The place was burning down. And you had these individuals like Kramer on Mad Money and everybody on CNBC, the cheerleaders for the stock market, all of them saying that everything's fine and to just stay where you are, don't panic, just hold on to your seats, everything will be over in just a moment, everything's okay. And then after about a 20 to 40% drop later, and a lot of people losing everything or a lot of what they had, they kind of began to acknowledge and then pat themselves on the back for predicting the event. So, keep that in mind. Always remember the real people, the real heroes, what you will, or what have you, from that time period that really predicted this stuff early on. And you know who they are. You can watch the videos. The records are out there. There are people that pretend to know they thought this was happening and didn't. And then there's people that really did. The fact is, the people that today tell us things are going to be one way were the very same people that got it so horribly wrong leading into 2008. And these are the same architects and managers, the same orchestra conductors of the economy that manage all of this stuff today. Okay. You've got the euro. Let's just take a couple of euros here, right? There's some euro coins. Pardon my dry hands there. It's winter time, as we've talked about. Here's a famous symbol, right? The euro. What do you think about that? Who knows where it's going? But what lends this coin value? What gives that coin value? What's the difference between, let's say, that euro and this 200 peso coin, this thick, heavy, massive coin from Mexico that's pretty much worthless? Worthless. Just garbage. You know, you've got coins from everywhere. New Zealand, Africa, Kenya, Tanzania, just many dysfunctional or defunct or even no longer operating governments. And you got piles of paper over here from India, from Canada. I have a Malaysian note somewhere, and then I got these won here from, I have a note, Korea, that's right. But then you have what's here. Adding to the stack, guys. Adding to the stack. Just did it today. Spent some Christmas money. You don't see these every day. You don't see me buying these every day anyway. This is a, they were all out of Eagles. So I went and picked up a nice quarter ounce maple. out of the case here later on, and when I put it away. But there you go. That one coin is worth more than all the paper piled up here, and all the coins, and all the promises, all the empty promises from these governments. That one small little quarter ounce of gold holds more value, more energy, more investment of labor, more time than all of this. And this coin, this gold coin, will hold its value for another 10,000 years, whereas these are worthless now, and many of which were made less than 10, 15 years ago. 20 years ago. Yeah, they're all fairly new within the last couple decades, and they're all, you know, just dysfunctional garbage. So there you go, my friends. 2014 is shaping up to be a interesting year. I think we should all keep focused, remember where we've been, remember where we're going, and keep reading, keep your eyes on things, and pay attention. But most of all, just keep doing what's right. But I think the Fed is about to get aggressive on rates. I think we're going to see this new Yellen character do some interesting things. But I don't expect the Fed to get it right, as they have a pretty poor track record last century anyway. But thanks for paying attention. Thanks for waiting out the opening of the secret envelope. And thanks again for visiting the Junius Maltby channel. Feel free to join the discussion below. Throw in some positive comments. Talk amongst yourselves. And, you know,